The second item of business of this meeting is to consider the recommendation of the Board of Directors to amend the company's restated certificate of incorporation. The proposed amendment would add a provision to the restated certificate of incorporation authorizing the Board of Directors to issue up to 50 million shares of a new Class B common stock, with each Class B share having economic rights equivalent to 1/30th of a share of the current common stock and with 1/200th of the vote, and to redesignate the company's current common stock as Class A common stock, and to make each share of Class A common stock convertible into 30 shares of the new Class B stock at the option of the holder. I think before we get into moving that motion, I think this would be a good time to have a discussion and take your questions regarding the issuance of the Class B. And I should give you a little background. I think many of you know the background on this, but over the years we've had probably half a dozen people, one time or another, propose that the creation of an all Berkshire investment company or a unit trust. In other words, an entity that would hold nothing but Berkshire stock and then would parcel out its own shares in smaller denomination pieces to the public. And we have generally discouraged that because we felt that there was considerable potential for abuse in such an arrangement. And our discouragement has been successful up until last fall, when there were two proposals that went as far as submission to the SEC for clearance that involved unit trusts, and these unit trusts would have owned nothing but Berkshire shares and then been sold to the public in small denominations, probably with a minimum investment of around $1,000 or so. And holders of those trusts would have bought into an entity that had a defined life, but that had considerable in the way of costs and some tax consequences that they might not anticipate when they came in. And Charlie and I were worried that a combination of Berkshire's past record, which cannot be repeated, and high sales commissions and a low denomination and a lot of publicity about Berkshire and myself, which, as you've seen this morning, we attempt to discourage, that a great many people would end up buying these unit trust holdings without any idea really of what they were buying, and with unrealistic expectations as to the future, and that would in turn create a considerable demand, because these unit trusts would go out and buy Berkshire shares. That would create a considerable demand against a fixed supply, much of which is almost unavailable because people have a low tax basis and are reluctant to sell, and I hope they're reluctant to sell for other reasons. And that the very action of the creation of these and that push on the demand might very well create some speculative spurt in the stock, which in turn would induce people who had been approached about the trust to feel they were missing even more of a good thing by rushing in. Rising prices in certain kinds of markets create their own kind of demand. It's not a sustained demand, and it's a demand that the reversal of which later on, when people become disillusioned, can cause a lot of problems. But that potential was there with the flood of buyers with unrealistic expectations, high commissions, and a fixed supply. So we attempted to dissuade both of the promoters. One backed away and then came out a few months later with something that was a combination of Berkshire and some other securities which were at least thought to be in our portfolio. And we started hearing from people that it was clear had no understanding of what they were buying, or the costs involved, or the potential tax implications, or anything of the sort. So at that time we had to make a decision, and we had to make it rather quickly, as to what would be the best solution to this problem that in turn wouldn't create the same sort of thing that we felt had potential harm when being done by these promoters. Obviously, we considered a split of the stock, but we were worried that a split would send out signals to all kinds of people who want to believe in things that may not be too believable about future performance, and that they would look at it as some grand chance to buy in at a lower price. Of course, it wouldn't really be a lower price in relation to value, but it would be a lower denomination. And that, again, against a fixed supply, might very well have created the same kind of problem, maybe even a greater problem than would occur with the unit trust. So we came upon the idea of the Class B shares, which would create a supply that would match the demand for, in effect, split shares, and that would be offered in a way that did not create special inducements or to create false inducements to people thinking of buying. And one of the things we did was we stuck a commission on it, on the issuance of the Class B shares, that was about as low as any I've ever seen in many years in Wall Street, because we did not want salespeople to have a great inducement to go out and sell the shares. We wanted anyone that was interested to read the prospectus and think about it and make their own decisions. And we did another thing which is quite counter to the normal commercial approach, which is that we said we would issue as many shares as people wanted to buy. And you do much better in this world if you're selling something to say only one to a customer, and you have to get in early, or you have to know somebody in order to get shares. And that's, many new issues are sold that way. And it's very effective. I mean, it's like those old stories about in Russia where there'd be lines and people would get in them without knowing what they were going to buy when they got to the front of the line. And that's a very effective selling tool. And it's one that Wall Street is not unfamiliar with. But we decided that to reduce any of that feeling that you have to get in early or only the big guy's going to get it or something of the sort, that we would announce loud and clearly that we would have shares available for everyone that wanted. So there was no reason to assume that it couldn't be a hot stock in effect. And we've done various other things. So our hope is that the Class B shareholders that we attract are of the same quality as the people in this room, that they have an investment attitude that where they feel they are buying into part of a business, that they expect to stay with it for the indefinite future, maybe the rest of their lives, and they do not think of it as a little piece of paper that may be hot because it's a new issue or something of the sort. And it lets the people who are happy with the present shares stay in exactly the same position, which is what I'm going to do, what Charlie will do. We have made the B very slightly disadvantageous in two respects to the A. It has a lower vote, and it will not participate in the shareholder contributions programs. There were reasons for both of those, but in addition to the explicit reasons, there also is the desire that the B not be made fully, it's just a slight bit inferior, but it's not fully as attractive as the A, because we did not want to do anything that pushed everybody into converting into the B. If that started in a big way, the B would then enjoy the better market, and it would create its own dynamic where it made sense for everybody to do it. So we have left it so there is no reason for you, if you own the A, to convert to the B unless you wish to sell or give away some portion of your holding that would be less than a full A share. And it will be convenient for that reason, but beyond that, there should be no incentive. If the B should trade slightly above 1/30th of the price of the A, there will be arbitrage activity that will keep that from being anything other than a negligible amount. It, of course, could trade well below 1/30th because the B is not convertible into the A. Charlie, would you like to add anything before we start taking questions on this? And
No.
I encourage everyone to ask. Yeah. Yeah. Charlie, as you will note during the meeting, does not get paid by the word. But I encourage anyone to ask any question. There are no bad questions about this. I mean, last year we talked about a preferred issue, and people had very valid questions. I might take those 2 points of difference between the A and B just to start with. On the shareholder designated contributions program, which was $12 a share last year, in addition to wanting the A to have a very small edge over the B, which would be a reason for not having the B participate, it also would get very impractical in terms of taking $12 and dividing it by 30 and soliciting the names of charities and to designate contributions. We can handle the present program fairly efficiently, but we would not want to be sending out checks for $1 or $2, and it would get very inefficient. So we have told prospective B holders that that's not going to happen, and so they're fully informed coming in. In connection with the vote, the issuance of the B does create more votes outstanding. So absent any change in the situation, through the issuance of shares which we are not particularly eager to issue, the vote, my vote will be diluted somewhat by this, and frankly I had no desire to create a lot more shares which would dilute the vote of the Buffett family. It will be diluted somewhat by this action because we will have all the present votes outstanding plus some votes from the B. If there is a lot of conversion to the B, it is true that our holding will go up percentage-wise, but I see no reason why people really should convert, so I don't think that's likely. I think in the end it'll stay very much the same. And as I mentioned earlier, we want there to be a slight disadvantage to the B. In all other respects, we will treat the B just as the A. We have a problem with numbers at this annual meeting. We're going to have to do something next year, and we haven't figured it out yet either. But the suggestion was made by someone that maybe the B would get second-class seating or something. We're not going to have any of that. From this point forward, with the exception of the 2 things we put in the prospectus, the B shares will be treated in every way as equivalent to A. So with that, and with Charlie's reluctance to elaborate, we have a 6-zone system in here, and then we have another 2 zones in the overflow room. So if there are any questions in Zone 1, somebody just raise your hand and somebody will bring a microphone. Zone 1 is over there. 2 is back in the corner. 3, 4, 5, and 6. So it just goes right around clockwise. Just raise your hand and somebody will bring a microphone to you. We've got a question, I think, in Zone 1.
Good morning. I'm Marshall Patton from Bandera, Texas. And when the price is struck on the Class B shares, those of us who buy our shares through computer programs, do we have assurance that whoever we buy from, that will be the price that we pay for these shares?
Yeah, the price, there'll be a price established probably Wednesday night or thereabouts of this week, and everybody will pay the same price, and a very high percentage of that price, incidentally, will come to Berkshire. I mean, there's a very, very low underwriting spread compared to any other offering. Now, once the initial offering is, everybody will pay the same price. Large institutions, the buyer of 1 share will pay the same price. Subsequently, the stock we expect will be listed on the New York Stock Exchange probably Thursday morning. And we have the world's greatest specialist here, I believe, Jimmy McGuire, who handles the trading now of the common and will handle the trading of both the A and B. Jimmy, are you here? You want to stand up? Just so. There he is, the world's greatest specialist, Jimmy McGuire.
Okay, thanks.
I think he leads the singing of "Wait Till the Sun Shines," Nellie, too, annually. You can see him on CNBC occasionally, and the nightly business report. I want to give equal time here. But Jimmy will be trading both classes of stock starting Thursday. As I said, it will be impossible. After the first few days, it would be impossible for the B to sell much above 1/30th of the A, because people would buy the A and sell the B if more than a very small, with even the smallest of arbitrage differentials. But there will be markets in two shares and in two classes. They will both trade in 10-share lots. That will be the round lot. So-called round lot. Usually the round lot on the New York Stock Exchange is 100 shares, but in the case of both Berkshire shares, the round lot will be 10 shares. Now, I read one or two press accounts that said, therefore, the minimum purchase is 10 shares. That's not true. The minimum purchase of each stock, each class of stock, is 1 share. I mean, you can buy 1 share or 2 shares, or you can sell 1 share or 2 shares, and you have an odd lot differential, just as you would if you were working with less than 100 shares of a company whose stock traded in 100-share round lots. But there's no minimum size in the case of either share. And you will see, when they get the mechanics straightened out, and they may have a little trouble with it, but you will see Berkshire A and Berkshire B and quoted in the papers. And I think that it'll be quite clear after Thursday what is going on that. I don't know about the computer purchases, but I don't certainly in terms of the initial offering, that will be through one of, I think, 137 people or brokers in the selling group, and it's the same no matter who you deal with. Zone 2.
My name is David Hendel. I'm from Boca Raton, Florida. To your knowledge, will this program effectively discourage the unit trusts?
Well, it's certainly designed to, and I think the answer to that is yes, because I see no way that a unit trust, either in connection with the initial offering or with the subsequent trading, I see no way that a unit trust could offer people as an efficient and inexpensive way of participating in Berkshire as direct purchase of the B. Bear in mind that the unit trust, if a unit trust were established, it would have to buy Berkshire shares in the market. So it would have the costs that people have in buying shares, and then on top of it, it would superimpose these other costs. And in addition to the initial commission, they even had a valuation fee. That was a job I wanted to have, because every 3 months or however often, maybe every day, their job was to evaluate this trust value, which involved the great skill of being able to locate it alphabetically in the newspaper. The figure was left blank as to what the evaluator's fee would be, but I had a feeling that it was one of the more cushy jobs available. And there was an added problem, too. I mean, if these unit trusts started and did not get off the ground very far, they could have become something in the way of orphans, and they certainly would have become expensive to operate. And then with Berkshire paying nothing in the way of dividends, but with the trust incurring expenses, including this evaluator's fee, among others, but with the trust incurring expenses, they would have to sell small amounts periodically to pay the expenses, and that would create tax consequences for every unit trust holder. I mean, people would not know we felt they would not know what they were getting into. The more serious problem is that somebody would flash our past record in front of them or show them some chart on Berkshire stock price and say, this is your chance to do the same thing, and it obviously wouldn't have been. But based on what we have seen, right now we anticipate the offering being 350,000 shares, but the extent to which the number of tickets involved, that even seeking out informed purchasers only, there's very substantial demand. So I think if you widen that circle to include uninformed, it might have been quite an experience. I think the answer is that we will not have a problem with the unit trusts in the future. Zone 3.
I'm Adam Engel from Boulder, Colorado. In terms of the number of shares that you're going to issue, B shares, do you plan to just look at the book on Wednesday and issue enough to totally satisfy the demand? And do you have any plans to do a secondary if it starts becoming a hot number?
Yeah. Well, I think what we plan is to tailor the size of the offering to fit the demand that appears Tuesday night or Wednesday morning or whenever the exact moment will be on that. But the offering will be designed to do that. Like most offerings, I would anticipate that the underwriter will and this is a supposition at the moment, but it's frequently done, would sell some more shares than the initial offering with the intention of creating some short position in the security, and then they have an option to take from the company for 30 days up to 15% of whatever we initially sell, which protects them on their short position, but the short position also helps in terms of having an orderly market in the stock subsequently. But we will essentially tailor the size of the issue to the demand as it appears to us midweek. We have no plans for any secondary offering. I think this has been sufficiently publicized. There's a large network of selling group members, so that people that are interested but wanted to buy in a smaller denomination will have had their chance. I think there will be present indications there'd be 350,000 shares out. There would be a fairly large number of holders based on what we're seeing. So the market should, starting Thursday morning on the exchange, there should be, in my opinion, a reasonable market based on that kind of quantity and the number of people buying. And so I anticipate nothing subsequently. Zone 4. Yep.
My name is Tom Conrad. I'm from McLean, Virginia, and I want to go to this meeting and tell all my friends and family members who lied last week. But I've been reading in some publications that you said that you would not advise your friends and family members to buy at these current prices. And I'm just concerned if I go out and run and tell them why you're saying, well, Bill, what your feeling would be. Should I go tell my friends and family members?
I think I'll leave that one up to you. What I said at present prices, Charlie and I do not think Berkshire stock is undervalued, and that is not what's gotten reported sometimes. I mean, sometimes people have said we thought it was overvalued. We did not. If you look at the prospectus, or if you look at the prospectus, you will see that what we said was we do not think it's undervalued. Now, I find it somewhat entertaining that people regard that as a kind of an amazing statement by somebody making a public offering. But if you think about it a bit, can you imagine a management that goes out and says to the world, we are selling you something in the new stock and it's way undervalued? What do you say to your present shareholders if you go out and say to the public, we're selling you something that's worth $1 and we're going to sell it to you for 80 cents? Now, that would leave me very unhappy. So I feel that any management that is talking about selling their stock and they say it's very undervalued either doesn't know what's good for their present shareholders, or they may have their tongue in cheek. We would not sell a part of your interest in Berkshire at a price which we feel was adequate for the present shareholders. It's that simple. If we sell 1% of the company, and 350,000 shares is close to that figure, a B, we are selling 1% of your ownership in See's Candy. We're selling 1% of your ownership in Geico. We're selling 1% of your ownership in the Buffalo News. Those are all valuable assets. We have no intention of selling 1% or 10% or the 100% of any of those entities at a price that is not fair to present shareholders. That doesn't mean it's unfair to new shareholders, but we would not be selling the stock if we thought it was undervalued. I'm not sure what we would have done if we'd had that position when the unit trust came along, but we have put it in that perspective. But we are not selling any of our shares. Frequently on a new offering, you see present holders, but I have very close to 100% of my net worth in Berkshire, and it leaves me quite happy. I've got a trust I run, set up in 1964. I'm the sole trustee. I can do anything in that trust I want, and I am freed by the person who set up the trust of responsibility for a concentration of investments. And I have some members of my family who are beneficiaries of that trust. That trust owns nothing but Berkshire Hathaway stock. That doesn't bother me at all. I'm not recommending purchase, but I'm perfectly happy owning Berkshire. But we do not want we do not want people to think that when they buy into Berkshire that they're buying something that's undervalued, because it's not. And we say in that fourth caveat on the prospectus that we want people to buy it only if they expect to be holders for a very long time. Charlie and I expect to be holders for a very long time, and in fact, you may see us up here sometime where we don't know who the guy on next to us is, but we'll put on an act, though. That is our attitude toward Berkshire. We do not want people to come in who think it's going to be a hot stock or selling for more a year from now, because we don't have the faintest idea whether it's going to be selling for more or less a year from now. Never have had. We do think that to the extent that Berkshire attracts a special class of shareholder that really looks at themselves as owning a part interest in a business, like they'd own a part of a farm or part of an apartment house, and they expect to hold it really for the rest of their lives, we think that it's a perfectly sensible thing to do because we're doing it ourselves. But we don't want to go beyond that. Now, I'm not sure whether we got Zone 4. Can we go back there?
My name is Gordon Shepard from Montreal. I wondered whether you had any plans for what to do with the money.
Well, the answer to that is in the prospectus, but we have no immediate plans for the money. But we've faced that situation a number of times. I mean, the money, the inflow of money and outflow of money should not be, in our view, attempted to be matched too carefully in this world, because you get investment and business opportunities at times that differ from the times that funds come in. And one of the most important disciplines in running a business or managing investments is to not get your not to try to coordinate your actions simply with the availability of cash. Over time, we found a way to use money. It's much tougher for us to run $17 billion than it was when we had $20 million in the business. There's no question about that, and we pointed that out many times. And it'll get tougher still if we get larger, which I hope we do. But the fact that if $400 million comes in on this offering or whatever, that's really no different than $400 million coming in some other manner. And when our float grows, we take in more money. When our earnings are retained, we take in more money. When we have, I forget what the check would have been on the Cap Cities transaction, but it was certainly well over $1 billion that came in on a single day. So money's fungible, and we have to keep looking for bigger and bigger things as we go along, and that's what we do focus on. But it doesn't bother me to take it in. It wouldn't bother me if we weren't taking it in. It wouldn't bother me if we took in 3 times as much. It doesn't make a lot of difference. And we will have the constant challenge for Charlie and me is to allocate capital as we go along. And it's a nice challenge. Zone 5.
Hi there. Lee DeBroff, longtime shareholder, I think going back a number of years now to when it was a little more intimate affair. Not quite sure whether I should look at you in the TV here or in real life on the stage, but anyway, I'm on the very right of you. And I see all the guards around you, and I see all the security and that sort of thing, and then I see this offering of the Class B, and I sort of wonder whether, from your perspective, you feel you might be in the same boat that the Pope and the President are. And I mean this absolutely sincerely, because I don't think that you have perhaps as good a handle as some of us do on the renown that you carry outside of Omaha, Nebraska. People who have no idea what investments are about are fully aware of who you are. And when they see this offering, I think you may find that there are substantially more people who are interested in just having a piece of you for the sake of saying they have a piece of you than having absolutely any idea what they're doing. And I noticed that I try to read the fine print here, on page 14, first paragraph, second line, you indicate some 50 million shares of Class B common stock may be offered. And so I'd like you to comment on this situation that you find yourself in, where you may be perhaps out of touch with the popularity that you have.
Well, my first reaction is maybe I should tell my barber we could save the clippings and sell them. I don't think it's quite as extreme as you say, but in relation to the 50 million first, we have to authorize enough shares, because we are going to allow every share of Class A, or present common stock, but the Class A, to convert to B. So we have to have the shares authorized to take care of 30 times the present almost 2 million shares. So 36 million shares in effect are reserved for the present common stock, and as long as we were authorizing it, well, we need that much, or we wouldn't have the shares actually available if everybody came around to convert. That's not going to happen, but we still have to be prepared for it. We have no plans to issue a lot of shares. But the point you mentioned, which I think you stressed a little more than I would have, but that is what we were worried about in terms of the unit trust. There are people that think that it can all happen again from this kind of a base, which is mathematically a joke. And Charlie and I would settle for one whole lot less, right today. And we have done everything we can. I mean, if we hadn't done this, the unit trust would have moved forward, and I think they would have cashed in on that phenomenon you suggested, and in a few years, it would not. I would have been in a somewhat different position, because people can get very disillusioned if they have hopes that aren't realized, and we have done everything possible, I think, to filter out those who might have an unrealistic belief. And everyone should read a prospectus before they buy shares. And I think we've designed what we're doing about as well as we can to moderate that phenomenon you're talking about. There may be a few come in, but not too many. Charlie, do you have any thoughts on that?
Well, if we only issue the amount we're now talking about, it's sort of a non-event around Berkshire. Be 1% or
yeah, it's
something
1%,
like that of the. It solves the problem of these disreputable followers, and 1%, what does it matter?
You heard that remark. We were referring to Charlie earlier about all I want to know is where I'm going to die, so I'll never go there. Well, we think about that in terms of we believe in reverse engineering, and how do we keep people from buying it who really are going to be unhappy? a few years later. It's a little like singing country songs. You should sing them backwards. That way you get your home back and your auto back and your wife back. I mean, Zone 6, so we got...
There was a hand over here, wasn't there? Right here.
Good morning. I'm Raina Lowy from Chicago. Proud to be here.
Where are we? Over here. Okay.
I have a question that's been asked me, and I really don't know. Several people wanted to know if they could buy directly from the company.
The answer to that is no, but Solomon Brothers is the underwriter of the issue. They have 137 or something broker dealers, virtually all the major ones in the country in the selling group. The costs to the company of doing this are really very, very low compared to any issue I've seen. When AT&T had their spin-off or the sale of Lucent, which was close to a $3 billion deal, their percentage costs were more than double what our costs will be, for example, on this offering of Berkshire. So it's almost as if you're buying it, the Class B holder is buying it from us in terms of what I would call the frictional costs involved of getting the issue done. In fact, if we handled it ourselves, it might cost more. But the company itself is not a broker dealer, and it would require a whole group of different hoops to jump through in order to have a direct issue. It will be sold only through broker dealers. Zone 7. This will come in from another room. Here we are.
There aren't any questions at Zone 7.
No questions in Zone 7. Zone 8.
No questions from Zone 8.
Okay, then we'll go back to Zone 1.
Mike Rocker from Flint, Michigan, God's country. I noticed in the press when this issue of the unit trust was going on that there apparently also were some people trying to form mutual funds to carry Berkshire stock, which I kind of thought was a good idea because there's one potential class of Berkshire owners that could only own Berkshire stock via either an open-end mutual fund or a closed-end mutual fund. And that is those thousands of teachers and hospital employees whose future retirement money is in 403B plans that are limited to investing in mutual funds only. And so I wonder if, first of all, if you were aware of that, and if so, if you considered that, and if not, if you might.
Yeah, well, the answer is I wasn't aware of that, so it wasn't considered. There are, of course, some mutual funds that own Berkshire shares, but there's no all Berkshire fund outstanding. I would say this, that if the law was set up to, in some way, to restrict investments of this group you're talking about to options that involve mutual funds but that don't involve individual stocks, I would think it might even be regarded as a way around it if a fund owned nothing but one stock. Because if you can't buy General Motors directly under, I assume, the relevant rules or statutes on that, it would seem that a fund that owned nothing but General Motors might be regarded as a way of getting around that. But the answer is that it was not considered. I don't know where the rules are derived, whether they can be changed by some organization or they're part of some statute. But if they're part of some organization, by a vote of their directors, they might be able to allow purchase of individual stocks within those plans that you describe. But if not, it does seem to me that that an all one stock fund might be regarded as simply a way around the rules. Zone 2.
Alan Rank, Pittsburgh, Pennsylvania. Have you determined what the symbol will be for the Class B?
The symbol? No, we haven't.
May I make a suggestion? As a broker, the stocks that have come out and given themselves Class A and Class B cause massive confusion. If there be any way to make the symbol something like BRB and just keep it a simple 3-letter symbol, it aids people both in following it on the tape on CNBC. As brokers, 4-letter symbols on the New York restrict a lot of things we can do as far as punching them in. If there's any way you could keep the symbol for the B a simple 1, 2, or 3-letter symbol, it would be greatly appreciated.
Well, thanks for the suggestion on that. The exchange has generally been exceptionally cooperative in trying to work with us. I mean, a 10-share trading unit is no piece of cake for them, and I'm sure at times that they have wished we were a little more like some of the other companies that list on the exchange. But they've been very, very cooperative and helpful, and we are. They listen to things we suggest. We listen to things they suggest. So we will try to do whatever facilitates things at the exchange and the reporting of prices. And it's nothing we will try to impose on them. Believe me, I have no favorite name that I'm looking for. So we'll see what ideas they have, and we'll include that suggestion. Zone 3.
Paula Finster from Tulsa, Oklahoma. Very glad to be here. I'm one of those few second-generation, finally finagled a ticket out of my dad. 3 years
Her dad
ago,
has a soda fountain incident. If you're ever in Tulsa, be sure to see him.
he certainly does, and you're certainly invited to come back. I was here 3 years ago for the movie theater, and considering the growth, I know you won't leave your beloved Omaha, but maybe you could build a stadium that's covered. Considering the growth, with adequate parking. Here's my question. You said there's going to be unlimited offering, as much as they want. This question is not designed to get a rise out of Mr. Munger. However,
it's not easy to do.
Understood, considering the bridge game of yesterday. Anyway, my question is, you're authorizing up to 1%. What happens if it goes bananas, as Zone 5 suggested, and it goes greater? You said this 1% is yours. Is the next 1% yours? Is the next 1% ours? I know we're limited partners and you're a controlling partner, but how far does this ball game go?
Well, in terms of the size of the offering, whatever the size of the offering, it affects everybody economically the same. I mean, our shares are no different than the ones of the people in this room. So we do not care from an economic standpoint whether the issue turns out to be approximately 1% or whether it was 1.5 or 0.75%. It simply, as long as we're not selling the stock below its true value, we are not going to be hurt by it. So it's inconsequential to us. We're not going to be helped in any significant way by a large sale. It would appear to me, and we're just a few days away from the offering, and it's been out there a while. So I would doubt if there's huge changes, but I don't know the answer to that. I mean, that could depend on what happens in the general stock market, but I don't think you'll see any huge change in the offering. If there were a big change, we obviously would very promptly let the SEC know. The SEC has wanted us, as we have seen changes in demand as we've gone along, promptly change the size of the offering and the covering page gets modified. And we've done that. As every day as indications come along, we've tried to be responsive to their instructions on that. And the 350,000 shares is our best estimate as of last Friday, and we'll look at it the next day or two. But I don't think it's going to change dramatically. I don't know, though. I don't want to. I'm giving you a definitive answer on that, but it's just it's a strong impression. Thank you. Zone 4.
Mike Assail from New York City with a question for Charlie about his investment models. I'd like to know the most useful models on industry consolidation, vertical integration, and models which explain the special cases when it makes sense to invest in retailing stocks.
Well, I think, I don't want to interrupt you now, but I think we'll save those to the general question and answer. This is only on the issuance of the Class B right now.
Sorry.
But we're glad to have that question later on. It'll give Charlie time to figure out the answer, for one thing. We'll go through all of the questions regarding the Class B, and then we'll have a vote on the class authorization of the Class B, and then we'll get into general questions and answers.
Sir,
somebody over there. We'll take another one from Zone 4 if there's somebody. Monitor.
Mark Venditti from Connecticut. I'll apologize ahead. This isn't meant to be an impotent question or in any way, shape, or form. Do you think that the issuance of the B in any way might in an effort to protect the folks who might be out there suckered in by the trust, if you will, in any way penalizes the A shareholders, either one, or might penalize them, either one financially or two philosophically? In the BRK experience, I don't mean that in any kind of elitist fashion, because I don't think you've ever propagated that. BRK doesn't propagate that, but clearly there's a room full of people, or rooms full of people, who have made a commitment financially to show that their philosophy is with you. Does that get diminished? The other part of the question is, the trust as you portrayed them didn't sound terribly attractive in a longer term. Would they perhaps have ultimately failed as folks realized that they hadn't gotten into what they thought?
Well, they might have, but I think the rub-off would have been on us rather than the promoters of the trust. Probably might have been on the promoters too, but in terms of the failure of the trust, I don't mean failure in an absolute sense, but in terms of disappointing their investors. I really think if tens of thousands or hundreds of thousands of people had come into something that was sold as being an all Berkshire type trust, if people came away disappointed some years, I think they would tend to project that disappointment upon Berkshire fully as much as the promoter who sold the trust, who they might not even be able to find at that time. The first question, I don't think we wouldn't be doing this if we thought it would hurt present shareholders. We would, much as we might detest something else that was going on, and we designed it so we felt that it wouldn't hurt present shareholders. In terms of them having a philosophy, the new shareholders having a philosophy similar to the present ones, we've tried to filter those out coming in. But I intend after the offering to send out a booklet, kind of like freshmen at college, orientation, greetings to Siwash U, and we'll send it to everybody, new shareholders and the old shareholders, explaining our philosophy and just as an orientation course on the company, and we'll get that out probably in a month or so after the offering settles down. I don't see any reason that Berkshire has evolved over a long period of time. We had 12 shareholders at the annual meeting 15 years ago, and we seem to be able to retain the same class and group of shareholders in terms of people who really understand the business. It's a different group than you find at other companies, and I think we can, as long as we've had this filter in effect operating as new people join us, I think we can keep it. Charlie?
Yeah, if the offering went wild and you issued 3% of the company new, you're also taking in $1 billion odd. It's a non-event for us.
He's very excitable. Don't say anything to him. Zone 5.
Ed Johnson from Park City, Utah. As you receive the proceeds of the Class B sale and generate other cash, are you seeing opportunities out in the marketplace to continue to provide the kinds of returns that we've been fortunate enough to experience in the past?
With or without the sale of the B, we don't see things to do that can maintain anything close to the average returns of the past. We've tried to convey that, and it becomes a mathematical absurdity. Money just won't compound at that rate in this world, absent extraordinary inflation. Certainly won't compound in real terms. So, absent the issue of the B, we are not looking at things. We're not seeing things. We're not hoping to find things that match some of the things that we have found in the past relative to the capital base we've had in the past. But we have that problem with or without the B, and it has not changed in any even very minor degree by the issuance of the B. We are looking for things all of the time. Anytime we find anything that makes sense to us, we will do it. The harder part is to make sure that we don't do something when we don't find something that makes sense. I mean, that's the bigger worry. And when we find them, they'll come along, and you never know when it's going to happen. We run into businesses. I described a little bit of that in the annual report, almost by accident. We've had contracted to make one purchase this year. The people who run it are here today, and it came about because I was attending a birthday party, and I'll go to more in the future now. So things have not ended around here. We'll find interesting things to do over time, but they can't remotely be as profitable as the things we found in the past, simply because of the large capital base. Zone 6.
Hi, I'm Matt Zuckerman from Miami. I don't know, I think Charlie is the same class as Ev Dirksen. $3 billion, we'll soon be talking about real money.
Yeah.
The two questions I have basically are one. Number one, referring to the gentleman over here before who commented on your popularity, which will definitely affect the stock, don't you think, and the second part of that is that even my wife's beautician has put in for some shares of the stock, and he represents a small tip of a large group who are probably doing the same thing on the one hand, so that there's going to be a large popular demand for the stock, which probably is not reflected in the numbers that the selling brokers are getting from institutions. And number two, mutual funds themselves, in order to lend some panache or glamour or whatever to their portfolios, will certainly be sucking up Berkshire stock after this. And have you taken all of this into consideration when you decided upon the number of shares that you're sending out, number one? And number two, that the reaction, at least in the first 14 days of the public to the shares, which will probably be in the range of $1,100, might not send the B shares up high enough to make a very, very interesting spike in the price of the A stock.
Well, we've considered what you're talking about. I think that the issue has been well enough publicized that the demand will largely be reflected on the books of the underwriter in a day or two. And I see no reason at all for a spike in the stock. I mean, the way we've designed it should really prevent that. And we tell people not to expect it. If any institution wants to buy it, if any individual wants to buy it, they're going to have a chance to do it. And I don't see any reason why there should be some huge influx of people immediately subsequent to the offering that didn't hear about it during the offering period. It's interesting. I think most of the demand will be retail and smaller holdings, not so much institutional. Most new offerings are done in a manner where the idea is to have far more demand than supply, and therefore cause people to maybe order stock they didn't even want, and just on the idea that this restricted supply will cause a big jump the first day, whether, you've seen Yahoo or a number of other offerings. Personally like that sort of distribution arrangement, because you'll find that 30 to 40% of the issue will perhaps trade the first day. Well, I think, and perhaps at a lot higher price. I think there's something a little wrong with that kind of an offering, because the company obviously isn't getting proceeds that are equivalent to what people are willing to pay, and favored customers get the chance to flip the stock and really are getting paid an exorbitant underwriting fee themselves, even though they're called purchasers, because they sell it the first day. We will be very interested in seeing the volume in the B stock the first couple of days relative to the amount of the issuance. And I will be disappointed and I'll be surprised if the trading volume in the B stock the first couple of days related to whatever the size of the issue is turns out to be anywhere near as high as with most new issues. I think that we will have a better success in finding people who really want to own it and who do not buy it to flip it, I think, by this method of distribution. But we'll have a test of that. We will see what happens on trading volume, and I invite you to look at the volume and compare it to the amount we issue, and then look at that relative to other new issues this year, and just see how successful we were in finding real investors rather than people who were buying it to sell it to somebody else the next day. Let's see, was that zone 6? I guess we go to zone 1.
Maybe we can vote.
Yeah, but I don't want to cut off. Charlie says maybe we can vote, but I want people to have their questions. No? It just encourages them when you do that. I want to be sure people get their questions answered on this. I don't want to prolong it beyond. If you feel your question has been 95% answered by an earlier question, I hope you'll skip asking it. But we do want to have people who have questions about it answered, because I can tell by commentary and letters I've received that some people have genuine concerns. Yes?
My name is Jan Anglin. I'm from Southern Indiana, and this is my first Berkshire meeting.
Good.
I did have a concern about the B shares that's less business and more, I guess it would be concerned with your and Mr. Munger's personal safety. I often see your picture in the newspaper, and I certainly don't mind seeing it on financial magazines, but now it's kind of like proliferating. I don't like the idea that you are so visible. That bothers me.
Yeah.
I mean, do you understand what I'm saying?
No, I understand exactly, right. Yeah, it's occurred to me. I appreciate that, but the answer is there's no other way. I mean, if over time, in terms of what happens, and as it grows, you get more visible, basically.
I know, but along with the B shares and things, can you kind of like be quotable but less available for photos?
No. Well, I normally am. If you've noticed, in terms of interviews or anything of the sort, I do not do them. I've been invited to go on all of the news shows, and I basically don't do it. Frankly, with the shareholders, I feel differently about this group. I'm delighted to see everybody come here, and I enjoy getting together with the shareholders. I think the real protection is if we'd done something that had caused the stock to balloon way up and then come way down, I might have had to be a little more careful.
I think she has a very good idea. Having seen that acting, I think hereafter maybe you should be the voice of Mickey Mouse.
I do appreciate the sentiment on it very much, and it is unavoidable to a fair degree, although Charlie may have thought I wasn't pushed into those acting jobs. Zone 2.
This is Joe Greer from Omaha, Nebraska, of all places. Regarding the conversion privilege, is there a time limit on the converting from the A to the B?
No, that's a good, I'm glad you asked that question. That's a good, the first 5 days or so after issuance of business days, there's no conversion. But after that, you'll be able to convert until Judgment Day. It's forever convertible from A to B, but it's not convertible from B to A. So there's no need to convert it until you have a reason to do so. And as I pointed out, there's a very slight disadvantage in converting it. Until I had a need, I would not convert it. Zone 3.
Scott Dowling from Redmond, Washington. Kind of related to this question. As an A shareholder, I can only see really 2 reasons to convert A shares into B shares, one of them being gifting reasons. And in regard to that, how does one convert A shares into B?
Yeah, there are instructions on that in the proxy statement as to how that, I guess it's in the annual report too, that it describes how to do it. But basically you get in touch with the Bank of Boston to do that and proceed from there. Or if you have your shares with a broker, you would instruct your broker to do it. Zone 4.
Good morning. I'm Ruth O'Wades from San Francisco. I wondered, how did you decide that the ratio of the Bs should be 30 to 1 instead of 300 to 1 or something in between?
Yeah. We wanted to have something that was roughly would trade initially at least in the $1,000 range. We thought it very unlikely that anyone would find it commercially feasible to set up a trust that offered units that were denominated much below that. So that's as low as we felt we had to go. And we did not want to signal in any way that some sort of last chance or something like that to get in for some very low sum for people that just had some wishes that they could turn $100 into $100,000 or something. I get letters from people that think that somehow that can be done. It can't be done. And we don't want to appeal subliminally or any other way to people who harbor those hopes. I'm sympathetic with them, but we don't have the answer to that. So we went down to the level to match the unit trust. Zone 5. We'll try and end the questions on the B fairly soon, but I don't want anybody that feels that they've got some reservations about this not to have a shot at asking their question.
My name is Bob McClure. I live in Singapore. And the way I figure it, the sale of the B shares at the price they will probably be sold will give an immediate boost to the book value of Berkshire Hathaway. So as far as I'm concerned, the more the merrier. Can you give us your thinking on that, the accounting treatment, how this will affect the book value of Berkshire?
Well, any shares we sell at the equivalent per A share of in the range of 33,000 or thereabouts where the stock is selling now will increase the book value per share, but that does not mean it increases the intrinsic value per share. I've said many times in the report, we use book value as a proxy in tracking movement of intrinsic value, but it does not represent anything like intrinsic value per share. And the key is not what it does to book value per share, but what it does to intrinsic value per share. And we believe the intrinsic value is materially higher than the book value. We don't spoil your fun by ever giving you a number, but we do not regard the fact that it increases the book value per share as being any kind of a determinant in deciding to issue the shares, but it will have that consequence mathematically. The key is the relation to intrinsic value. Zone 6.
There was a question over here.
Any questions in 6?
Behind you.
Your problem seems to be that you've attracted a fair number of potential shareholders that don't have a way of estimating intrinsic value or developing expectations about what Berkshire's future prospects are. Do you have any suggestions about how they might do that, short of the general guidance that you can't continue to compound your intrinsic value at the same high rate that you have in the past because of your asset base, and that you don't believe the share is undervalued?
Yeah, well, we'll probably talk more in the general question and answer period about our various businesses, but we simply try to give you all of the information about our businesses in a large general way that Charlie and I consider important, and that we would want if our positions were reversed. I can assure you that if all Charlie and I knew about our businesses, what we publicly disclosed, it would not change our estimates from what they might be from being intimately involved with the businesses. The facts are out regarding what we do. So you are in the same position to the extent that you have followed our kind of businesses and understand industry conditions and all of that. And we'll continue to do that. We essentially regard you as our partners, and we try to tell you exactly what we as partners would want to know if you were running the place, and we'll continue to do that. We won't tell you a number because we don't know the number. We have a range in our mind. Things change that range over time, and we'd probably get in all kinds of trouble if we tried to put out that range. But and Charlie and I would not come up with exactly the same range, but they'd be pretty close. We'll talk more about that a little later. We do have questions now from Zone 7 and 8 in the other room, so we'll take on Zone 7, please.
I guess you've answered our questions in 7.
Took care of Zone 7. How about Zone 8?
No questions from Zone 8.
Well, okay. I think at this point we can move on to general questions after we have this vote, and then if you have another question or two that comes up during the general question and answer period, we'll be glad to work those in at that time. So we are now at the point. Is there a motion to adopt the Board of Directors' recommendation?